Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently have been so many new community members that have been asking questions regarding how to start investing in the stock market and so on. And what I want to do today is in the next few weeks is to put together a set of videos that to kind of hopefully help you guys look at the S&P 500, because when we invest in the stock market, one of the things that we're doing really is buying individual stocks or ETFs. If you are completely new and you've never done any, you don't know anything about stocks and how to analyze stocks and so on, but potentially you want to learn it for the long run, the best thing to do is invest in ETF. ETF basically gives you a basket of stocks, okay? And what I would definitely do instead of just buying one individual stock is to look at this playlist here. So if you're new to completely investing, there's about 29 videos there. Some of them are outdated. Watch the newer ones kind of thing, and to understand the concept of what ETFs are. So first of all, do that. And then secondly, if you're interested in then picking up individual stocks, then of course it's important to learn a bit more about how to do it. And what I did when I first started is to look at the S&P 500 sectors and then picked the winners from each sector. So in the next few videos, I'm going to put together each sector. I'm going to pick 5 companies from each sector that could potentially be a good investment. These companies are Sharia compliant and so on. The S&P 500 has 11 different sectors, and inshallah I'm going to look at all of them apart from REITs. REITs are not my favorites anymore. I think I'm going to stop investing in REITs. I've already, I've got one that's sitting here completely dead at the moment. In fact, it bounced back to about almost 3% in the last couple of days. But in fact, this is one I'm planning to get rid of in the long run. But yeah, so I want to get rid of that. Apart from REITs, I want to do the rest of the S&P 500 sectors. And today's video, we're going to focus on the industrials. So the industrial sector has so many subsectors within that, and it's important to understand how all of them of course work and so on, and just do your own research, a bit more information. But I'm just going to share with you guys these 5 companies that I genuinely believe are a good investment. I do own some of these companies, and at the end of the video I will be adding to one of those videos, so stay tuned for that. If you have not subscribed to the channel yet, please do so, because it really helps the channel. And the other thing you could do for me is if you can join us a Patreon account where you get access to the Discord, all the buys and sells that I make regularly, all the dividend trackers, you got ETF trackers, you also got the Sharia compliant investing ebook. If you're new to investing, that will be inshallah help you. It will cost you 15p per day. Try it out first month and see how it goes, inshallah. Now let's have a look at the companies we're talking about today. The first one is Parker Hannifin Corporation. This is one of the companies has been around for a very long time. I do believe it's actually a dividend king, which means they have increased this dividend for 50 plus years. They have a 68.1 billion market cap. They have a narrow economic moat. Price right now $525 per share, a dividend yield of 1.2, payout ratio 24%, and latest increase was 10%, which is really nice. The 5-year dividend compound annual growth rate, it's basically 15%, which is quite nice. Dividend streak of 67 years. So dividend king, like I said already, $6.52 is what you get for every share of this company that you own. Safety 94%. 5-year in terms of the revenue side of it, basically they grew that revenue about in the last 5 years about 5%, and the last 5 years for the EPS is about 11%, which is quite nice. Profit margin 14%, return on equity almost to 26%, and return on invested capital 18%. So in terms of profitability and what the management is doing with the money that we invest in, basically is really good. Free cash flow right now we're looking at about 2.9%, $2.9 billion, and total return the last 10 years 16%. Growth estimate next year about 7%, 11% after that, 23% premium, $431 per share is where they think the price should be. Now the next one we're looking at Illinois Toolworks, and this company has a market cap of $71 billion. It has a narrow economic moat, $239 per share is where the prices are right now. Dividend yield of 2.3% right now. Payout ratio 56%, so it's still very low. When the payout ratio is low, that means the company has the room to increase that dividend. So the lower the better. Basically, you will see some of these companies we have today here might not be in a position where they might be increasing 10-15% in the next few years. Latest increase was about 7%, 5-year growth rate of 9%, 52 years of increasing that dividend. So again, another dividend king. Annual payout right now $5.60, safety 81%, 5-year in terms of revenue side of the growth side of things 3%, EPS 7%, profit margin 19%, return on equity 100%, and return on invested capital of 36%. $2.9 billion free cash flow right now, total return in the last 10 years 12%. So this kind of helps us understand where the company has been in the last 10 years basically. Growth estimate next year 5%, 5% after that, 12% premium right now. $214 per share is actually where the price should be. The next company we're looking at, Union Pacific Corporation. This is definitely one I own, 152 billion market cap. This is one of the railroad companies out there, one of the biggest ones out there. It has a wide economic moat, $228 per share right now. Dividend yield 2.2%, payout ratio 50%. Latest increase, they have not increased it recently, 11 basically percent when it comes to the last 5 years, and 17 years of increasing it. Annual payout is $5.20. Safety 88%. The revenue grew about 3% in the last 10 years, 5 years, and the EPS is actually about 10%. Now, this is probably going to change in the next few years because they have a new CEO, has a completely different, not completely, but different direction for the business. And this is one of the things he's trying to basically do is kind of basically help the company start growing their revenue slightly faster. Profit margin 26%, return on equity 45%, return on invested capital of 15%, free cash flow $5 billion, total return in the last 10 years was 11%, growth estimate next year 13%, then 15%, 7% premium right now, $216 per share is where they think the price should be. It's not far off, so inshallah hopefully we'll come back down to earth. The next one is another one that I own in the portfolio, UPS, 119 billion market cap, wide economic moat, $138 per share right now. Dividend yield of almost 5%. Payout ratio, we're looking at about 81%. Latest increase, again, this is very high, so hopefully we'll come back down in the next few weeks, or next few months, inshallah. Latest increase was only 1%. The 5-year growth rate of 12%. 14 years of increasing, $6.52 is what you will get. Safety 69%, so that's why I'm not worried about this at all. In terms of revenue side of it, 5% growth. EPS 7%, profit margin 66%, and return on equity 32%. Return on invested capital 20%. $5.6 billion of free cash flow, 6% increase in and total return in the last 10 years. Growth estimate next year about 19%, then 7% after that. Fairly value right now, $158 per share is where they think the price should be. Soon it will become undervalued again. So again, I'm not really worried about this company, although I'm down quite a bit, and I'll show you at the end of the video. But I really like the business. I'm not worried about it, and see what happens moving forward. Final one is another one that I do own in the portfolio. That's Automatic Data Processing, one of the oldest companies out there. 102 billion market cap, wide economic moat, $242 per share right now. Dividend yield of 2.3%, payout ratio of almost 60%. Latest increase was 12%, and the 5-year growth rate of 14. Dividend streak of almost 50 years. So one more raise, and this will become a dividend king. Annual payout is $5.60, 97% safety. The 5 years about 6%, 11% after that for the EPS, 19%, 20% almost a profit margin, 88% when it comes to return on equity, 61% when it comes to return on invested capital, $3.4 billion of free cash flow. Total return in the last 10 years, we're looking 14%, which is absolutely huge. 9% growth this year, then expected to grow about 10% after that. Fairly value right now. Again, $240 per share. Now, it's almost there now, okay? So again, this one is really one of my favorite companies out there. I've been buying quite heavily, quite a bit in the last few months. So just to quickly show you from Sharia compliance side of things, there's really nothing to worry about. All of these companies are, of course, currently trading a basically Sharia compliance side of things. There's absolutely no issues, but that can easily change. You always do your research and always find out a bit more information about these companies. Now what I'm going to do is, because I don't want to make the video any longer, is actually add to UPS. This has been down for a bit, 21% almost. I'm down almost 21%. So I do have over £400 in the account. So I'm going to buy 3.8 shares of this. In fact, I'm just going to run it, just buy 3 shares. Okay, I'm going to buy 3 shares of this company today, inshallah. I already own 40, and guess what? They actually paid me This was something that actually didn't include in the dividend payout. I forgot they were paying last day, so they actually paid me this much. Look, there you go, 40 shares. I got paid, how much did I get paid? £43.70, which is quite nice. So yeah, there you have it. That's the 5 companies that in the industrial. Again, really just do your research, find out a bit more information on these sectors. And I just realized the public storage has actually gone up so much to the point where it is now is my top holding. Anyway, it's gonna go sooner or later. I will let you know when that happens, inshallah. Overall, the portfolio is doing okay, and that buys now gives us, actually moves the almost back to where we were about 2 weeks ago. Inshallah, it goes, whatever happens, and I'm going to keep basically sharing this with you guys, inshallah. I hope you enjoy the content. And the one of the stocks that we talked about last couple of days is already up almost to 4% just today, which is absolutely ridiculous. But yeah, of course, these companies can fluctuate back and forth all day long. So the most important thing is that you are a long-term investor and focus on the future, inshallah. Have a wonderful day. Assalamu Alaikum.